Welcome to the podcast about investing in startups, where existing investors can learn how to get the best deal possible. And those that have never before invested in startups can learn the keys to success from the venture experts. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back to The Full Ratchet. On today's special segment of Investor Stories, the investors address trends, sectors, and markets that they think are positioned for outsized returns in the future. This is the segment called What's Next? On today's special segment, we have Ramy Adeeb of 1984. Ramy, can you talk about sectors or trends that you're bullish on?
Can I tell you what I'm not bullish on?
Yeah.
Whatever is hot right now. Whatever is hot right now, we're not going to be bullish on it. We try to avoid hype like the plague. So whatever is hot. So last year, cryptocurrency, yeah, we're not bullish on. Scooters, yeah, we're not bullish on. But ultimately, I am very excited about a sector of society with low net promoter score, some industry with a bunch of antiquated players, any of this, 300-400 Fortune 500 companies that shouldn't exist that exist today. Mm-hmm. And then seeing a startup that's using software to disrupting them.
Love it. I can think of so many that have exceptionally low NPS scores that are just a part of the fabric of our lives, and you can't get away from them.
Right. Well, many startups are fixing that, right? I mean, insurance is, to some extent getting fixed. A lot of, we used to hate taxis. Now we have Uber. We used to struggle with hotels. Now we have Airbnb. So it's working. It's working.
Well, when you see those at Pre-Seed, just send them our way, Ramy.
Absolutely.
On today's Investor Stories segment, we have Somesh Dash of IVP. Somesh, can you talk about sectors or trends that you're bullish on?
Sure. We just had this conversation last Monday, but one of the things our team is really focused on is we do market maps where we look at new sectors or emerging sectors that are transforming. And we usually do about one every 6 to 8 weeks, but we have literally 4 in the next 4 weeks queued. As a parent, I'm spending a lot of time with my kids. So one that I'm seeing up close and personal every day is online education. It is pretty remarkable how much education has changed since you and I were growing up, Nick. I mean, so much of testing, collaboration, curriculums, parental reporting are done now online. We saw it in higher education at the college level, but I'm seeing it now K through 12. And there's just so many companies that are set up to succeed. So that's definitely one space. Telemedicine is another one where we're seeing, with the advent of COVID-19, how many different parts of whether it's diagnostics or non-critical care can be done through physicians, nurses, clinicians, communicating with patients and families through mobile apps. And also the measurement of that is getting better and better. So there's a whole ecosystem in telemedicine and digital health that's really exciting. Of course, productivity. We're investors in Slack. We just talked about Zoom, but even tools like Dropbox, which we've been longtime shareholders of, are just exploding as a result of all of us kind of moving virtually versus physically. Gaming, we're seeing a lot of entertainment companies take off. In our portfolio, we have a number of gaming companies like Niantic that are starting to really see new use cases pop up, or Discord, which is used by gamers to chat, or Masterclass, which is kind of in the cross section of entertainment and education. So we're seeing some real tailwinds, and there's new markets that we're really excited about that are starting to pop up. Security continues to be a market that is resilient, and even more important, hacks are actually going up, not down, as people are disgruntled, and also business continuity has emerged, and there's been disruption. So I think the need for great infrastructure security, great perimeter security is absolutely there. So, and we don't think the incumbents will be able to handle all the needs that come up. So it's a great time for startups in enterprise security as well.
You guys have a killer set of logos. I just have to say it. It's amazing.
We're very grateful. We're very grateful to the founders to let us invest with them.
On this special segment, we have Jeremy Neilson of Assure Fund Management. Jeremy, can you talk about developments in venture capital and fundraising that you're bullish on?
I find that the interest in private transactions, particularly startups, has just been growing and growing. And I feel like that talking to our clients and family offices and high net worth individuals and others, that they're going to participate in the public markets, but not at the levels they used to, that they are looking for places to place their funds, and private assets is where they want to be. And so as groups like you partnering with Assure and others create the flexibility and optionality for groups to invest in private assets through SPVs, through funds, through other structures and ideas, that more and more funds are coming to the venture capital and startup world. And it's kind of up to us to provide those solutions for them. And I'm finding that they're very, very receptive. So pretty bullish on seeing more and more funds coming into the space. I suppose we could then have a conversation about if that's a good or bad thing, but I'm bullish on seeing a lot more money really looking for ways to get into these deals and these transactions. I was going to say another one was just secondaries. I had a client tell me, he said on the public side, 600 out of every one transaction of public equities is a secondary, meaning, you're buying Apple shares from the guy across the street who's selling Apple shares rather than buying shares right from Apple. In the private side, it's just the opposite. 600 transactions are primary, buying right from the company, for every one that's a secondary. And I'm seeing that secondary conversation heat up more and more. There's a number of groups really working on it from the entire stack, from early stage startups to pre-IPO. I'm very bullish on a lot of solutions and ideas coming out of the various conversations that will increase the optionality and flexibility around doing secondary transactions inside the private investing space.
Is that something that you at Assure plan to get involved with and work on?
Yeah, we plan on working with that with our clients. Our clients are asking us on how we can help them with secondaries inside these SPV structures. I think that's a possibility. Partnering with other groups and figuring out how to make that happen is going to be a reality. And we're excited about being part of those conversations. We have a number of clients kind of begging us to solve that problem. And that's frankly how Assure has grown from the beginning, is our clients really are pulling us along, asking us to solve the concerns or the problems or the desires that they have. And that's something we're hearing a lot of, is how do we be able to trade these LLC membership interests?
On this special segment, we have Minnie Ingersoll of 10110. Minnie, can you tell us about sectors or trends that you're bullish on?
Ooh, yeah. So it's not super well articulated right now. I mean, we are software and data investors fundamentally at 10110. I'm obviously very bullish on LA and just markets outside of the Silicon Valley. Mm-hmm. And I see that as a huge, interesting growth area where entrepreneurship used to be entrepreneurship, even product management when I started was just a less known, less understood field. And now, you don't really need accelerators as much because students and people, there's so many resources, and there's, every school has, maybe not every school, but there's a lot of entrepreneurship resources, classes out there. And so I think that allows a lot of people, you don't have to be in Silicon Valley. And if anything, Silicon Valley has gotten a lot more complicated, to use a nice term. And so people are looking for ways to, grow their businesses outside of Silicon Valley, which was very much not the case when I was getting going. And then on sort of back to like the societal issues, I think things that I do find personally really compelling are solutions that are serving the society equally, the bottom half of society. There's a lot of almost like overlap with the private sector and the public sector, which is, I'm not a GovTech investor, but I was just looking at a company that's helping people pay off their federal student loans, helping you fix your credit scores. So a lot of those sorts of things are things I like to look at. And I think it's a big trend because I think increasingly like millennials and others, they care about what their brands stand for, if you will. And I feel good about where our society is going and where sort of entrepreneurship, what I see in entrepreneurship right now.
Love that. And just to go back to your point on San Francisco and LA, like, was the primary motivation to move because, the role was more LA based, or do you feel like, the opportunities as a VC are going to be better outside of the Bay Area? And in particular in LA? What are kind of your thoughts on LA as an ecosystem versus the Bay Area?
Well, when I have friends or people ask me like, what sort of startup should I join? Should I join? And people say like, oh, join one where your manager is someone, the sort of person you want to become. And I say like, join a startup that's printing money and growing like a rocket ship. And those have tons of opportunity. And I think LA just feels like it's got this great momentum, and it's not the same. It's $1 trillion economy. So it's huge, right? And yet it hasn't had the same level of venture as Silicon Valley, but probably an order of magnitude. So, and yet there's this amazing opportunity where it's $1 trillion economy. LA graduates more engineers than any other city in the country. But historically, if you were, graduating from UCLA, Caltech, USC, you might, and wanted to be in entrepreneurship, you might feel like you needed to move to Silicon Valley. And that is just clearly no longer the case. And not only that, but I see a lot of my friends and people in Silicon Valley who are moving to LA and other cities. And that's exciting. And, from a very selfish perspective, I'm trying to recruit all my friends here. But yeah, I think it's great to join a place that has positive momentum. And I think LA's got a lot of really positive momentum.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.